Nike just reported their quarterly earnings. They are down 4% right now. Let's go to earnings per share. They were expected to report 53 cents a share. They came in at 70 cents a share. That is huge. Just by hearing that, I wouldn't think down 4%. Revenue expectation of $11.65 billion. They came in at $11.6 billion. Now, the interesting thing is when you start reading into their press release. Let's go over here. You can see now it's down about 3.25%. Oh, now it's down 3%. Just keeps getting lower. Okay. This is crazy. So Nike, $11.6 billion, down 10% compared to the year prior. Okay. Nike brands revenue were $11.1 billion, down 10% compared to the year prior. Nike direct revenue, $4.7 billion, down 13% compared to the year prior. Wholesale revenue, and guys, remember this direct part. This direct revenue was huge for them. They were pulling a lot of things off the shelves of stores like Foot Locker, Dick's Sporting Goods, and they were giving them more exclusive pieces that are just for them. And they were trying to go direct to consumer through the Nike app, through Nike Online, whatever it is, through their Nike stores, which are weirdly popping up everywhere. But the direct to consumer down 13%, this was a big play for them. Wholesale revenues, $6.4 billion, down 8%. Revenues of Converse, $501 million, down 15%. Gross margin, however, increased 120 basis points to 45.4%. That's a good thing. Now, let's go over a couple of more things in here that I wanted to point out. I believe Nike inventories were $8.3 billion, down 5%. That's a good thing. Cash and equivalents from short-term investments, $10.3 billion, up approximately $1.5 billion from last year. That's a good thing. Here's something else I don't know if I like or don't like. This, we're going to get into the numbers, but I feel like there's a better use of $558 million than giving it out in a dividend. This share repurchase of $1.2 billion, I know that they have, and they approved this back in 2022. I know that they have a buyback program of $18 billion in place. I don't know if I absolutely love that. I definitely didn't love it when the stock price was much higher than today. I mean, let's see, where were they? They were at let's call it $180 a share in 2021. Yeah, $179.10. Today they're sitting $88. They're going to open tomorrow at $86.22 if we open right now. Now, let's go to a couple of metrics here. $135 billion market cap with an enterprise value of $147. That's fine. There's a lot of inventories. It's a very tangible business. I'm not super upset about that. This is going back to the dividend. Guys, their ROIC is, it's basically 20%. What the hell are you doing paying a dividend? Why are you paying out $2.17 billion out of an average 5-year cash flow of 4.65, even 6.2? Why are you paying 30% out? There has to be a better use of cash, especially if you're going to return 20% on your capital. I don't know. Gross margin, it's a good thing that thing increased. Profit margin, you can see that it's increasing. So those are a couple of really good things that are coming out. Now, for me, I need to look and say, I actually don't remember, which I probably should remember this, but I wanted to see, was there a bump from COVID? A lot of people staying home, a lot of people nothing to do, a lot of extra money in their pocket. What are you going to do? Why don't you go on the Nike app? I love the Nike app. I spend way too much money on the Nike app. I know Nick does the same thing. But if you look at this, 30 billion, 32, 34, 36, consistently slowly growing. 37, yeah, you had a little lull in there, but look at this. Jump to 44, 47, call it, 51, now 51.36. Where's normal? Is the new normal here 51 billion? Because this was a significant jump. Or is the new normal 45 billion? Is it gonna settle down? I need to think to myself, is revenue going to drop because things are normalizing for that industry? Also, think about it this way. Let's say that we have a recession. Let's say people are tightening their belts. Where are people going to start cutting costs? Well, probably Nike, and it's showing from their comparisons. Let's go back to the press release. I can actually scroll down here and show you those numbers. Look at this. Revenues, and this is last August versus this August, end of August. 12.939. It's a 10% drop. So you can see there's a significant drop in revenue. That is a significant drop in revenue. You can see profit also dropped. Cost of sales also dropped. Now, let's come down here to where they really break things down. Footwear. Footwear significantly fell, 14%. Apparel, down 10%. Equipment is about the same, so that's good. And if we go over to, this is in the United States, well, North America, I should say, you can see the 14% drop in Europe, Middle East. Let's go to China. That's an important one. Greater China. China. This one's actually more stable than anything else. Well, I mean, relative, but yeah, I mean, it's still down 8%. My point is, this is going to get worse. It's going, I mean, first, if I was having financial issues, what am I going to do? I'm not just going to go buy a random pair of shoes. That's for sure. So you have to look at it and say, okay, where is this thing going to settle down? Overall, revenues and profits are going to continue to come down, in my opinion. And you can see here, it's on my watch list right now for $60 a share. And you're probably looking at this saying, why is it so low on your watch list? I do have a reason for that. Because do I believe you should pay a premium for Nike? Yes, I do. And I think that a PE of 23 is perfectly fine to pay. Now the question becomes, is Nike going to give you outsized returns over the next decade? And to me, no, it's not. It's going to return. It's going to give you a good, decent return. But why would you not just go and buy an ETF? Just go buy the market. Why bother buying an individual stock like this? So for me, I want to get this thing dirt cheap. And this is just my style of investing. But if I'm going to go and buy something that's more likely than not, I'm not even talking about just recession. Everything that I talked about revenues, that's not my point here. My point is, let's say that revenues decline, they stabilize, they go back on the up and up. Eventually they get to 60 billion, 70 billion, whatever in revenue. I still don't think that that's going to give me outsized returns over the next decade. So I want to pay a cheap amount for this. So that's why I wasn't buying this when it was in the, where was this recently? 70s maybe? Yeah, around $70 a share. I want to get this lower. So I'm going to be selling puts on this thing. I already am selling puts. Premiums are not crazy right now, but I'm selling puts on this thing to get this probably, $65, $60 a share, somewhere in there. It has to be cheap. And that's kind of the big thesis I have behind this. And not just Nike. This goes into any other company, but there's room in the portfolio for a company like Nike. So when I look at this, let's see what they're doing right now, down 2.3%. When I look at this, I actually think to myself, this is really good. I love seeing this from my perspective, because do I think that this is going to last forever? Do I think this 14% decline is going to last forever? No. I think that things are tight right now. Things are very uncertain right now. Inflation is still incredibly high. People are worried about what's happening in the future. This is what you're going to see in brands like this. And to me, this looks like a buying opportunity, or an opportunity that I can go and sell some options and collect some premium along that way. So I'm scrolling here to go find something else. But guys, don't just buy something because I'm buying it. Even if this hits $60 a share, don't just go buy it because some guy on the internet is saying it. You shouldn't buy something because I'm buying it. You shouldn't buy something because Paul's buying it. You shouldn't buy something because some random person in the comments is buying something. You need to go do your own research, understand it. You might have a completely different thesis than me for buying stocks, and that is perfectly fine. There's multiple ways to skin a cat, as we say. So don't just buy something because I'm buying it. Now, this to me is such a huge thing, and I'm interested to see what's going to happen on their earnings call. Aren't they getting a new CEO soon? Yes, they're getting a new CEO. I'm interested to see, I think the current CEO is still in place, but I'm interested to see what's going to happen with this, specifically this right here, this direct revenue. This was a huge piece that they talked about last year. They pulled out of Foot Locker, and Foot Locker collapsed because of it. They said, we want to sell directly to our consumers, and it doesn't seem like it's working. Down 13%? I don't know about that one. And you know what's something else I'm concerned about? You go to Nike.com. Let's pull that up. Let's see if it actually loads. There it is. Serena Williams is right there. So Serena is getting older. How long can she be the face of this company? Tiger Woods. How long can Tiger be the face of this company? You go about Mike Trout. Mike Trout has basically fallen off a cliff. He's gone. So Major League Baseball is gone. Now you have LeBron. LeBron's going to probably do very well for a long time. Michael Jordan going to do very well for a long time. But a lot of these major athletes, who else is with Nike that we can think about? Well, I'm thinking about this right now and saying, I shouldn't have to think about this. Okay. We're just looking up some other names. Rory McIlroy, Federer. Does Federer even play tennis anymore? I mean, there's so many of these names. I'm sorry, Kobe Bryant's still on the list. Ronaldo's on the list. admittedly, I'm not wearing my Kobe shoes right now, but I just pulled out a brand new pair last week. And there's a white pair that just dropped on the sneakers app. I did not get it. I was very disappointed. But, I mean, Maria Sharapova. When's the last time you saw Maria Sharapova on the court?
Naomi Osaka.
Nick loves Maria Sharapova. So, guys, I just look at that, and granted, their endorsement isn't everything, but you look at a company like Under Armour. Under Armour had The Rock, Tom Brady, Bryce Harper, Steph Curry. You had all of these major stars, and it didn't really work out for them. So I wonder, how is that going to drive the future? Not that it's super important. Nike is in a totally different ballpark than Under Armour, but it's just something interesting to think about and something that Nick thought of when we saw Serena Williams here on the screen. So guys, if you like reactions like this, instant reactions like this, to earnings that come out, to news in the market, subscribe to this channel. I'll see you the next time.